Hello my fellow freedom builders and welcome back to the channel. My name as always is Hans Nielsen and today we're gonna look at market bottoms. Have we reached it yet? Have we reached the bottom of the stock market and is the only way now up, or is there still some downwards movement to see in the future? Today I'm going to tell you what I think, what I worry about, what I hope for the market, and please notice that this is not a prediction. This is not something where I tell you I know exactly what the market is going to do. I know a lot of gurus and analysts and all sorts of people out there want to get into the media picture and tell you that this was the bottom or this could not be the bottom. But what I do like when I invest is that I like to create my own macro picture of the world. What are the pros, what are the cons of the current situation? And then I, as always, use my standard method of investing. And I can tell you already that I know it's a bit of a spoiler here, but I think there is a fair chance that we are going to see some more downwards movement. However, I've still bought 3 stocks in the last week because I started to get buying signals. And that is an important point for me to stress, that you need to have a strict method. And you need to put your own bias aside and invest by your method. Because if you're trying to guess where the bottom is and try to invest out of that bias, then you are going to be in deep trouble 9 out of 10 times. So what we're going to look at today is we're going to look at some charts. We're going to look at the fear and greed index that I mentioned before. We're going to have a look at oil, the virus development. We're going to look at some buybacks, dividends, the Buffett indicator, and some job numbers. So I guess that would be pretty much for any video. So first of all, let's have a look at the charts here. And let's just have a look at the S&P 500 on a daily chart. What I see here is, of course, as you know, from top to the bottom down here, we saw something around 35-36% drop in price. And that, of course, was a shock to many people. I have been saying for the last year, a year and a half, that I thought that some sort of downturn was to expect, but I didn't see this coming, and I would say that no one really did. Of course, there are always the crash gurus that have been saying for the last 15 years that the world is going under, and now they could sit and smile and say, yes, now is the time. And then, of course, it is a bit annoying for them that we are seeing this spike up, because is this really it? Was this the bottom? Well, as I said, I really have no idea, but let me show you what I look at in my daily investment process. First of all, as some of you know, I do have a subscription area in Danish, and those of you that are in there, if some of you from Denmark are listening in, then you know this analysis I'm just showing here because I told you about it already here in March. Because what we were witnessing here in the S&P 500 was, of course, a drop. Then people called the bottom here and said, well, that was it, that was quick, now we're going up. But what this actually is, we can try to have it on a 4-hour chart to make it a bit more clear. This is what is called a bear flag, meaning that we have the flagpole here. It is inverted, of course, but then we have the flag. And if or when we break out of this flag, then we can, as a rule of thumb, we can take this length here of the flagpole and we can add it here. And what I predicted here was that we were going down here around 2600 in the S&P 500. And boy, did people laugh at me in many Facebook posts when I wrote that. As always, I was not sure it was going to happen, but what I said is that these bear flags and bull flags, they have a tendency of being right around 2 out of 3 times. Not always to the point where we hit the target, and as you can see here, we went way past the target. So what I'm looking at now is a potential setup of some of the same. Now it looks a bit strange here, but that is because it is the futures we're looking at. But what we can actually do here is that we can draw some sort of a flag here, and then we can speculate what would happen if we dropped out of the bottom here. Would we see another violent move down? And if that is the case, and I'm not saying that it is, I'm just trying to put up some different scenarios here. And if that is the case, the S&P 500 should, if the rules are fulfilled here, we should down to around 1800. I'm not sure we're going down there, but it is just something to watch. Right now, we are at a former bottom here. And how these are formed is that, and that could be for a stock or index or an index or something like that, is that people saw this one going up. They thought we had hit the bottom, and then it shot down, and people were really angry with themselves, banging the head against the wall saying, oh, I should have gotten out up here around 2800. And now that we are reaching that point again, people are feeling some sort of relief that now they can get out of the market without any loss, and then they start to sell. That is one of the psychological strategies that come into play here. So this is a possibility, but nothing is for certain. And as you know, and as I've said many times, when I do this technical analysis, I always remind myself that it is so easy to start drawing lines that support your own bias. So if I think we were to go further down, well, then it would be very easy for me to draw some sort of confirmation that if this one breaks, we are going down. If one of you is sitting out there being bullish, then you might instead be looking at, we have a bottom here, we might have a higher bottom here and a higher top here. So now we are in an uptrend. So that is very easy to fall into this bias trap. But that was just to give you a quick glance of the overall chart of the S&P 500. What I do like to show you here also is the Fear and Greed Index, and I have been telling you about that in another video a while back. That is the CNN Business. They're doing this Fear and Greed Index, and I'll not go into details today as to how it is calculated, but right now it is in fear territory. And what I do like to see is that we were down here almost at a zero. I don't recall if it was 0 or at least 1 or 2 or something like that, or 4 or 5, but we were very far down here. And what I said at that point is that if we get some sort of retracement, but we don't get below 50, if we stay in this territory, then there is a big chance or risk, I might say, even that we are going further down. And if we are looking at the historic development here of the Fear and Greed Index, then you can see here in the beginning of 18, we had a huge drop in the market and we went way down below 20. And then we had this spike up and everybody said, well, that was it. Now we are going back to a bull market. Let's just find it here just for the fun of it. Let's go to a weekly chart and see in the beginning of 18 here. Then it dropped and we went up and we dropped again. And that is what we see here in the Fear and Greed Index. That is this drop here. And then we went further up. Then in the Q4 of 2018, you might recall, we had this big drop. And what happened there is that we took, let me just draw it here. We took a drop here. Then we had some sideways movement and people said that was a bottom. And then we had another drop. And if we look at the Fear and Greed Index, this is the exact period here where it chopped up and down and people were losing a ton of money. And then all of a sudden we had this big upturn. As you might remember, the Fed came in and said, yeah, well, we might actually even cut the rates, and we started to go straight up. And what happened here was that at some point, fairly quickly, actually a month or so in, 2 or 3 weeks into 2019, we got above the 50 line. And what I said there was, well, if we can stay just a couple of weeks above the 50 line, I think this bull market is ready to run again. And it did. And we had some difficult months here in 2019 where everything went sideways in big turns. and then we ended the year very high up here, actually at the highest territory in several years. So now we are down. We have taken this spike up, but we are nowhere near the 50 level yet, and still we have seen a big spike up at something like 26%. So had you bought in here, and some of you were lucky or good to buy in here, then you are up with 3 or 4 years of S&P 500 average yearly earnings here just in a few weeks. So this is, for me, just the first little warning signs. And I have absolutely no idea if what we are going to see is just a little thing down here and then further up, or if we are going straight down or a bit down, a bit up and then down. There are all scenarios open here. So this is just some of the things that actually worries me. All right. So what could draw the market in different directions? Well, one of them is let's just find it here, the crude oil. And now looking at a weekly chart here, let's just have the daily chart, because this is kind of interesting. I've been calling this drop in oil for quite a while, both because of some fundamental factors in the oil, but also we actually saw quite a lot of these bear flags here. We saw one here, we saw one on the lower time frames, so we had I called it to my subscribers several times, this drop in price. I remember in a Facebook group where I wrote at some point that we might actually see 35. That was up here around 50. I said that we might even go down to 35, and I was almost kicked out of the group. So we actually went way lower. And now what can we say about oil? Oil has really spiked here, and if you have been following a bit the news here, then you know that the reason why it spiked is that right here, let me just draw an arrow, right here Trump went out tweeting that now there had been a very productive phone call between Saudi Arabia and Russia, and they had come to an agreement with 10 million barrels oil cut in production, maybe even 15 million. And I think 5 minutes went by, and then both Russia and Saudi Arabia went out saying there had not been any call, there were definitely not any deal made. And to be able to make a cut of 10 to 15 million barrels per day, you would have to get the entire OPEC plus, all of the friends, the entire oil industry in USA, and so on, to make huge cuts. And to be honest, I don't think that is very likely. Even though they do, even though they should get into an agreement with 10 million barrels per day of cut, then the entire situation, that I'm getting back to that in a second, but with the illness spreading all over the world, and especially in United States right now, then we can see an almost complete drop in demand for oil. So of course oil will get up sooner or later, but I think that this low price, and I have been telling you about that before, I think Saudi Arabia and Russia is trying to really weed out a lot of the shale oil industry in the United States, so that the amount of oil producers are dropping, and that will eventually bring the oil price up. But right now, with the illness spreading, with the oil price war right now, I don't see that it is likely. But if, and they're having a meeting tonight in the OPEC plus, and if they agree on something or some positive news come out from that, we might see a further turn up in price here. But I don't think it is sustainable right now. All the world's oil capacity for storage, oil storage, is completely filled right now. And I simply don't see how that could push the oil up. There's so much surplus of oil right now that there's nowhere to put it. So that is the oil part of it, and there's no doubt that if the oil drops further down, that would have some significantly negative impact on the US stock market as well. All right. To the development in this illness, if we are looking at the basics here, let's just have a look at the numbers, just a second. Yeah, here you go. We have the collected number in United States here, 435,000. Total deaths almost 15,000. That is really, really scary. And then we have right now, it is early morning in the United States, so the new numbers are not starting to come in, but we can see that, let's just see here, the number of daily deaths here, they were plateauing a bit around here, 12 and 1300, but then the last couple of days we have been up around 2000. And if we're looking at the development, it was actually, you can see that there were a lot of days where the number of deaths were growing with 30%, even up to 41%, but now they leveled a bit down and they are down between 13 and 18%. This is for today, the 9th of April. So right now at around 15,000 deaths, if we are setting it low and saying that they are only growing with 13% per day, then in a week there will be 34,000 deaths, and in 14 days it will be 81,000 deaths, and in 3 weeks, if they have not controlled and contained it, and they are still growing at 13%, well then they will be reaching the 200,000. And well, Trump has been smart and started to, you all remember that in the beginning he said that they had 15 cases, it was going down to 0, everything was under control, etc., etc. But now, and that is clever enough of him, he's trying to start to make a picture in the U.S. citizens' minds that between 100 and 200,000 deaths would actually be a success. It is a bit hard for me to see how that can be a success, since they squandered 60, 70, 80 days of preparation, but that is just my point of view here. But as you can see right now, we are around 2,000 deaths per day, and if it is growing at the pace of 13%, that means that in 6 days that would be double. So let's really, really hope that they can break this curve. What I'm saying with this is that, and that is one of the reasons why the market has gone up as well the last couple of weeks, is that Trump is starting to saying we are ready to start the entire US machinery back up. Then it won't be long, and then we are ready to go out on restaurants and so on and so forth again. I'm not so sure. When I'm talking to my friends, to my colleagues, when I'm talking to my wives and my kids, even though that Denmark is on the brink of starting up again and opening slowly up again, people are scared. And they are saying, I'm not going out buying a new car, and we're definitely not going flying and cruise shipping. Oh, no, never again. I will not risk being stuck on a cruise ship for 2 months or 3 months in case of some virus. So there's going to be some disruption of different industries. And as long as this curve is not actually broken, and it is not, I know they try to spin it as if it is, but it is not. Let me just see if I can get rid of this. Just a second. All right, it's because I minimized my screen here, so I cannot really access this for this annoying Saxo Bank advertisement here. It is actually Saxo Bank. Some of the I'm trading from Saxo Bank, and I'm trading from spreadmarket.com when I'm trading forex. But right now I can't get rid of Saxo Bank, it seems here. But when we're looking at a logarithmic scale and not an algorithmic scale, then we can see that the curve is absolutely not broken yet. Not in number of cases, and definitely not in number of deaths in the United States. And as long as it is not broken, then I have a hard time seeing United States opening up, and that means a potential complete collapse of the entire business environment. I saw a stat the other day showing that between 110 and 120,000 restaurants are estimated to close down to never opening up again. Way more restaurants are closing down right now, but between 110 and 120,000 of them in the United States are not opening up again. That is such a mind-blowing amount that if we start to calculate what impact that will have on the unemployment and so on, that is completely insane. And that leads me to my next point here, which is the initial jobless claims that comes out here in 42 minutes. So when this video is coming online, we will see this number. As you might recall, let's just have a look here. Here we are seeing the unemployment numbers or the initial jobless claims numbers from the United States. And at first glance, it could seem like, well, it looks nice and dandy here. But when we are starting to zoom in, we can see that we actually have a couple of weeks out here that are insane. And as you can see, let's zoom even more in here. 2 weeks ago, it was forecasted that 1.65 million people would come into this initial jobless claims, but actually 3.3 million came in. Then last week, the forecast was 3.5 million, but 6.6 million people came in, meaning that in 2 weeks we saw a rise of 10 million people in the initial jobless claim queue in United States. And I talked to a guy that was working with these stats in the United States, and he said that it could easily be between 3 and 5 million people higher, because that the systems, the computer systems, the officers doing all of this work could simply not keep up. So he said that there was a big lagging number here that would be added in the coming week. So this week, as we can see here in the MyFX book, we can see that last week it was 6.6 million people, and the consensus estimate this week is 5.2 million. Let's see if it shoots above that. As I see it, it could easily be 7 or even 10 million people, but let's just see what effect that will have on the market. All right, that was the job numbers. Then, and we are still talking about if we have seen the market bottom. And one of the things that have kept the markets up for the last, well, actually a year and a half, maybe 2 years, is that a lot of large US companies have had a lot of money in their hands because of the tax reform in United States. And when we see that, when we look at the stats of that, we can see that a lot of these companies have spent most of the money. I think it was something like 82% or something like of this tax reform money that was spent on dividends payout and stock buybacks. And when we look at that, and we can see now that a lot of these businesses are going to need some sort of bailout. And it is obvious, it is here in Denmark, and I think it will be in the United States as well, that if you are taking a multi-billion-dollar bailout for your industry, it is not very likely that the politicians will allow just right away that you pay out a lot of money in dividends or spend a lot of money in the buyback programs. Some companies, a lot of companies have already canceled the dividends and the stock buybacks just voluntarily because they thought that was the right place to go, even because they had a good CEO or because they had a good spin doctor telling them that that would be the wrong signal to send. But I think in the coming months, we will see an immense amount of large companies saying that they are canceling dividends and stock buybacks. And to be honest, talking to a lot of the economic experts, reading all of the material, I would say that a lot of the stock market gain in the last couple of years have been at least partially carried by these stock buyback programs, and they are disappearing right now as far as I can tell. So that will be another thing here, the stock buyback part here. Then as one of the last things that worries me a bit is the Buffett indicator, and I have showed that to you before. I know it is a bit simplistic, and it is, I'm not even sure it was Warren Buffett that invented it, but he has made it popular anyway. And what you can see here is a Wilshire total market cap here going up, and you can see the US GDP numbers. And what you can see is that the GDP for a lot of years have been growing, that is great. But since 2009, where we had the last big recession and crisis, it has been going up and has been going up way faster than the GDP. And right now, it is a bit hard to see because it is on the edge here. But we are down here at something like, we're around here 25,000, 26,000 or something like that. And the GDP is actually only at 2173 here, and we can see the Wilshire total market is at 2746. That indicates that there's still some room down to go, because all of the other big crashes, if we show them here, you can see they went way below the green line here and here, but they're not even close here. And what I'm thinking, and this is just my own speculation, but let's just have a look at the weekly chart again. A normal stock correction or a bear market or a crash is often around 20, 25, sometimes 30%. So what we saw here this year was a crash of 36%. But now we have seen a retracement up. So actually right now the market is just down a normal 20%. That is just the standard bear market drop. If we're looking at the Q4 of 2018 here, we also saw a drop in price. It was not as steep and then a retracement. It was just more gradually over a quarter here, and at the worst it was down around 22%. But at this point we had okay economic numbers coming out. We had the central bank, the Fed, that had been raising the interest rates, but that was about it. We had no illness spreading all around the world. We had no economies shutting down in China, United States, in the entire Europe, and we didn't see all of the really, really bad stuff that we are seeing right now. And still, we had a 22% cut in price, and then Fed went out saying, well, we might actually in 2019 see some rate cuts, and all of a sudden everything was good and we just went straight up 25% for the year. Great. Now, right now we are down 20%. That is actually less than we had the entire crash here. But the situation now, would you compare that to the situation in Q4 in 2018? Well, I certainly wouldn't. Right now we are, maybe it is worse to say that we are on the brink of collapse. But to be honest, I simply don't see that we can have a V-shaped recovery. I don't see that the economy are just going back to normal. Not in 2020 anyways, and something will be changed for good. So what I see is that in 2018, we were nowhere near a recession. Right now, we are actually most certainly going into a recession for the United States, maybe even worldwide. So when the GDP numbers are coming out, and we can see if Goldman Sachs are right, that we have a minus 9% GDP growth in United States in Q1, and they are predicting 34% down in Q2. And then they are predicting some sort of V-shaped recovery. But even Yellen and all sorts of old economists, they're coming out now saying it is definitely not being a V-shaped recovery. We are not jumping back to our feet and just sprinting like we did before, and not right after this illness is over. And the question is when it will be over. So what I see is that if the stock market should reflect the overall economy just slightly, then I simply cannot get into my head how this could be the bottom. But as I said in the beginning, I have no idea. These are just my speculations, and maybe my logic is simply flawed in some way. So as I said, I started buying Danish stock last week. I bought 3 different stocks. And they have been doing fairly well. And if the market turns down, as I worry a bit that it will, then I'll get my sell signals within a week or so. I'll lose a bit on the stocks. But then again, if the market shot straight up and I was not in, then I would be losing some upwards potential. So when I get my buy signals, I buy. But right now, I must admit that my bias, my overall fear or my overall expectations for the market is that we are going to see some further downside. And what I fear is that this bottom will not be enough. It will simply not hold. I should not be the one to say if we should go to 2,000 or to 1,500 or to 1,000, or if this was the bottom and we are going straight up to 3,500. Then again, I'm not a guru. I'm not some sort of wizard or a fortune teller. I'm trying to show you here what I build my bias on. And that is a combination of charts, fear and greed index, oil, the macroeconomic picture, the virus development, all the buyback dividend stuff, the Buffett indicator, the job numbers. I can simply not see that this can be priced in to a stock drop of only 20% at the current time. But then again, maybe history will prove me completely wrong, and you're welcome to write that to me and say, haha Hans, you were completely wrong. I can live with that, because that means that the stock market is going up and I'm making money as well. So I hope we'll all make some money in the markets, but take care of your money out there and take care of yourself in these days of the virus. I will be talking to you again very soon, and we will be looking forward to the job numbers today. That's all for now. Talk to you soon. Bye.